We talk to our man Teddy Kekstadt on Wednesdays. We get some economic data on Wednesdays. We get Fed Day on Wednesdays sometimes. Folks, if you haven't checked out the Tiger Forex Report, with everything going on in the markets, you're seeing what's going on today. Yields, right? The dollar, markets, it's all related. Check out the Tiger Forex Report. Weekly updates every Monday, updates throughout the week when warranted. You get a 30-day money-back guarantee. And don't forget, folks, you got some time at night on the weekends. You're looking for a great education? Head on over to the Services tab. Check out a couple of the webinars Teddy's put together. Capitalizing on time with calendar stock option spreads and Japanese candlestick pattern stock and option strategies. 2 outstanding webinars, only $97, folks. You gain access to the archive when you sign up. You can watch it as many times as you want. And Teddy Kekstadt, we got a market this morning. Good morning.
Good morning.
So, it seems like I always say, man, Teddy, it's wild. Where do we go? Where do we kick things off? But let's kick it off with inflation, man. You've been talking about, we were talking last week. Tough to see the Fed maybe doing anything in the near term, almost a little bit tougher. We got a hot inflation print. What do you think of this market, man?
Well, I think that there was a guy who comes on your show around this same time on Wednesdays a few months ago saying that this is exactly how the economic numbers were going to be looking.
We got to get that guy back on. Where is he? Let's get him on right now. Al, get him on. All right, he's here. Go ahead. Totally, man.
But no, we're going to see this until the fall. These numbers are not going to slide until the fall. I remember I said that unless the Fed wants to do some kind of a kickstart, they're not going to cut rates for a while. And the numbers are going to be inflationary at least until probably July or August. We're not going to start to see a retraction in inflation numbers until the fall. Now, where you will see it is probably especially in your mid-cap stocks as far as earnings. You'll see it there first. If earnings will be strong before inflationary numbers start to come down. And then it'll also spur even better earnings afterwards. So I think that's what you're going to see as far as equities. You're going to see from the midsummer, definitely going into the fourth quarter of this year, that earnings will accelerate, which will be strong for the market. And that's when we'll start to see the retraction in all these numbers. We will not see CPI come down at least until, like I'm telling you, until the summertime. That's just the way it is. They're all lagging numbers, and we're dealing with all of the impact of the last, especially 6 months. Since the summertime, it doesn't take a rocket scientist to say that there's inflation. Everyone knows it when they go to the store. Everything has gone up in price. Even restaurants, it's ridiculous. So, it is what it is, so, we'll be dealing with that until then.
I talk about it all the time, just anecdotally, but, everything is anecdotal. You got enough anecdotes and it kind of encompasses a big enough sample size. But one thing that always blows me away right now, Teddy, is the 20-ounce bottles of soda at checkout at Publix down here. I think they're $2.69. And it blows my mind because how is a gallon of gas outside almost $3, and you're telling me a 20-ounce bottle of Impulse Buy a soda is $2.70, man? Right. I'm old enough that, folks, those used to be 99 cents at checkout. You're talking about $2.69, Teddy. My goodness, right? But we see it all, man. Sugar water for $2.70, my God. But demonstrative.
A little thing of Tic Tacs costs now $2-3.
Everything used to be what? Candy bars used to be 50 cents, right? About, all that. And I'm going back, folks. I get it. But yeah, it's here, man. It's real. And we got unemployment at 4%. So what are we talking about, man? Right? It's like we got unemployment at 4%. GDP is a strong number. And we got inflation that's persisting. So I agree. We're going to wait a little bit. Let's get into some of the currencies, man. You do such a great job walking us through. And folks, go check out the Tiger Forex Report. Teddy, he's been on the ball, man. This is great. And let's go through it. So dollar spikes to 108.52. And it kind of is the theme we've been talking about, Teddy. You've been putting these numbers out here, so I don't imagine a huge shift of what we talked about even last week. But what do you think about the dollar sitting 108.30?
Well, I like it. I think that the dollar index still is going to be a bad gauge as far as the broad basket of currencies out there. But right now, especially, you can see like the U.S. dollar yen, we have a balloon underwater rally with this number. So it's very reactionary because the U.S. dollar yen is very yield sensitive right now. So, and the fact that there's no sign of a cut coming. Powell came out yesterday and say there's no sign of a cut coming for a while. So, and now you have, especially with a CPI number like this, I still think that the U.S. dollar yen can get to that 150 target or lower, but not with this environment. I mean, not if we, especially we have another month of economic numbers like this, like that means we may have a short-term low in the U.S. dollar yen that was set up, back last week on Friday. So.
Pretty remarkable, man. I agree. I mean, it's why we have a lot of recency bias. I talked about this when you go back to 0% interest rates for so long, and recency. I'm talking about 20 years, right? Almost just 15, 20 years. And if we didn't have that, I feel like everybody wouldn't be in such a rush to say why aren't we cutting rates? Because right now it's like 4% unemployment. You keep harping on it, but man, there's no reason why they should be in a rush in this market. Seems like the equities are doing just fine with a 10% 10-year yield at 4.65%. But I love how you break down those individual currencies that go into it. Dollar, yen, man, and you're seeing the reaction on gold. What do you think about gold? Because we got a lot of gold bugs, man. Can't help but talk about gold. I know it's not necessarily a currency, but boy, you break down in terms of how this thing trades, and just remarkable strength in this gold contract, even in the face of a dollar that's been holding up at 108 for some time now.
Well, I'll tell you what. Let me pull up.
Throw me a curveball with gold, but man, we got a lot of gold bugs, and it's everywhere right now.
I can always do it on the fly. It's no big deal for me. All right. Well, you have a nice little spike high yesterday in gold. Obviously, the trend is really solid. I like gold. I think you got to be basically a buy break kind of scenario right now for the market. Could it pull back? Yeah, I can get back to $2,800, but I think especially with what's going on with yields and stuff like that, and with the dollar, you probably could still see that gold could probably push up to that 2960 to even put short of 3,000. Yeah. So that's not really out of the realm of possibility with the current market right now, especially with the number like we had today. So if that gets reinforced and you see the bonds, especially if yields start to push back towards the highs of what they were at, just a couple months ago, why wouldn't gold put pressure the highs? Now, I'd be very careful being long at these levels. You can see it. Believe me, when there's a reason to sell off, I mean, how they go in is how they come out. This slope is very vertical. So the slightest thing that can reverse the momentum, you could have like a huge sell-off very quickly over the course of 1 or 2 days. So you got to keep your stops pretty tight on this trend.
I like it. I've been talking about just in general in this market, I'm trying to keep my stops tight because we got moves everywhere, man. Today's a demonstration of it, right? It's like, boom, we're down. Now the Nasdaq's only down 100 points. Just massive moves across the board. Euro, US dollar, we still heading back to parity? We're at 103.44. What do you think?
I think so. I think no matter what, that we are, especially right now with yields being firm, absolutely. Yeah. I think the parity is definitely, I think it's going to happen within the next couple of months. So especially if there's any, more bad news as far as the economy in Europe and Germany, going south, baby, going down.
All right, folks, check out that Tiger Forex Report. Check out those couple great webinars Teddy's got under the services tab. Teddy, appreciate the update as always, man. Have a great week. We look forward to talking to you next Wednesday as always.
Thanks, Tommy. See you next week.
Thank you.